feeling like you're just wading through a never-ending stream of AI headlines.
Yeah, it's a lot.
It can be really tough to get a clear picture of who's who and, what it all actually means. So today, we're zeroing in on a giant in the tech world, Alphabet, Google's parent company.
Right.
We've pulled together a range of sources, investor briefings, financial results, the latest news, really trying to give you a focused understanding of their position in this AI era.
Exactly. And our goal in this deep dive, well, it's to pull out the most crucial insights.
Yeah.
The information that will quickly bring you up to speed on Alphabet's current situation, the challenges they're facing, and where they might be heading.
And we're not just rattling off numbers, right? We're trying to understand the underlying forces at play.
Exactly. What do Alphabet's recent moves and, their financial health tell us about the broader tech landscape?
We'll be digging into the resilience of Google Search amidst all this AI stuff, the significant growth of Google Cloud.
And YouTube's consistent strength. Can't forget YouTube.
Definitely. Plus, the long-term potential of their other bets, those more experimental ventures, and their overall AI strategy, particularly with Gemini.
It's about understanding the implications, not just reciting facts, what it means for someone trying to stay informed.
Okay, let's unpack this, starting with something that might run counter to what you'd expect.
Go on.
With all the focus on AI disrupting established players, you might think Google Search, the very foundation of Alphabet's success, would be feeling the pressure.
That's a totally logical assumption. I mean, we're seeing new AI-powered search tools pop up.
So you'd imagine an immediate hit to Google's core search business.
Right.
But here's a key point, because it challenges that. In the first quarter of 2025, Google Search and other related revenue actually increased.
Despite the AI buzz.
Yep. It hit over $50.7 billion. That's a solid jump from $46.1 billion the same time last year. It's still their dominant revenue stream by far.
Wow. And what's particularly noteworthy there is the market share Google Search still commands. We're talking, roughly 90%?
Still around 90%. It's incredible.
That kind of hold isn't just about having a clever algorithm, is it?
No, not at all.
It reflects the power of network effects, user habits, crucial stuff for understanding how tech change happens or doesn't happen in established markets.
You're right. It's those built-in advantages, isn't it? Being the default search engine on so many phones, so many web browsers.
Exactly. People just use it because, it's there. It's the standard.
Those default agreements create a huge barrier for competitors.
A substantial barrier. Plus, we shouldn't underestimate just how accustomed users are to the Google search experience. Inertia is powerful.
Right. People tend to stick with what they know.
Mm-hmm.
And Google isn't just sitting back. They're actively integrating AI into search. Features like AI overviews.
Right, I saw a stat on that. 1.5 billion people using those every month.
1.5 billion. That's massive adoption, really fast.
Shows how quickly these AI features are being embraced. And they're still experimenting, testing things like AI mode for more complex searches.
So the big question, is AI currently helping or hindering their search revenue?
Well, the current evidence suggests it's actually boosting revenue, at least for now.
Boosting? How?
We're seeing increased engagement, higher click-through rates, particularly for searches with, commercial intent, looking to buy something, researching a service.
And I saw this for the first time in over 2 years. The cost per click, the CPC for ads, actually went up.
That's a significant indicator. It suggests advertisers are seeing value, that the AI-enhanced results are working for them.
But there's a long-term concern, isn't there?
Absolutely. This short-term boost raises that critical question. If AI just gives you the direct answer right there in the results.
Yeah, why click an ad? Or even a website link?
Exactly. Will users still click on those traditional links and the ads next to them?
Google's trying things out, right? Putting ads inside the AI answers.
They are experimenting with that, yes. But how effective that is, how scalable, that's still uncertain.
And we also saw that while Google search ad spending grew, Microsoft search ad spending grew faster.
That's an interesting competitive dynamic to watch.
And another wrinkle, those Performance Max campaigns, the automated AI ones, they actually underperformed compared to standard shopping campaigns for some retailers.
Right. Which suggests that even within Google's own ad tools, the AI solutions aren't, let's say, a magic bullet in every single case. Not yet, anyway.
Shows that traditional methods still have their place, maybe.
It highlights the complexity, doesn't it? How the ad market is adapting as AI evolves. It's not straightforward.
So how's Google planning to keep that dominant search share? Obviously, AI integration is one piece.
A huge piece. But beyond AI, those default agreements we talked about, they remain a really strong defensive wall.
Can't overstate their importance.
And they also actively guide website creators, with SEO best practices to make sure content ranks well, keeping the ecosystem healthy in a way.
So it sounds like Google search is in kind of a precarious balance right now.
That's a good way to put it.
They need to integrate AI successfully to stay relevant long term,
Yeah.
but they also have to figure out the monetization piece without cannibalizing their existing business.
Exactly. And you've got that potential threat from Apple maybe doing its own AI search in Safari.
Which directly hits those default deals.
Right. And then layer on all the ongoing antitrust scrutiny about those very agreements.
Yeah. It's definitely a multifaceted challenge for their core business.
No question.
All right, let's pivot. Let's talk about a different part of Alphabet that's showing, well, some serious momentum. Google Cloud Platform, GCP.
Okay, yes. GCP, this is a key growth driver to watch, absolutely.
The Q1 2025 numbers were pretty striking. Revenue up significantly.
Up 28% compared to last year. Solid growth. But even more notable was the operating income.
That jumped dramatically, didn't it?
Dramatically, from $900 million to over $2.1 billion. That's a major turnaround. It really highlights the increasing efficiency and scale they're achieving in cloud.
It's easy to forget they were losing money on cloud not that long ago.
Exactly. This really signifies a pretty significant shift.
But where do they stand in the market now? Still third place.
Still third, behind AWS and Microsoft Azure, important context. But they are consistently gaining market share, and the whole cloud market is expanding rapidly, so third place in a growing market is still significant growth.
So what's making GCP stand out? What's their unique angle in this very competitive space?
Their differentiation is heavily centered around data analytics and AML.
Makes sense, given Google's history.
Right. Think tools like BigQuery for data warehousing, Vertex AI for machine learning. They also have a strong foundation in Kubernetes for managing containerized applications.
Which is big for modern cloud stuff.
Crucial. Plus, you've got Google's DeepMind research heritage feeding into it, and their custom AI hardware, the TPUs, tensor processing units.
Those specialized chips?
Yeah, designed specifically to speed up machine learning. That gives them a real edge in the AI space, and we're seeing strong customer demand for these AI tools on GCP.
How do those strengths compare to the big two, AWS and Azure?
Well, AWS is still the dominant player, broadest range of services, the sort of default core cloud infrastructure for many.
Right.
Azure really benefits from that tight integration with the whole Microsoft software world, Office 365, Windows Server, and they're strong in hybrid cloud blending on-premise and cloud.
Yeah, GCP.
GCP really shines in that AML niche, data analytics, and also with its open architecture, supporting multi-cloud setups where customers use services from different providers.
But it hasn't all been smooth sailing for GCP, has it? I remember hearing about challenges like building up their developer ecosystem and enterprise sales.
That's correct. Historically, they've had a smaller developer community compared to AWS, and breaking into those really large enterprise accounts, that's been tougher.
And Microsoft's strategy must be a hurdle.
Microsoft's bundling strategy, yeah. Offering cloud services as part of bigger software deals, that definitely presents a significant competitive challenge for GCP.
So, looking at the bigger picture for Alphabet, can this strong growth in GCP, potentially offset any future slowdown in search revenue? If that happens.
That's the billion-dollar question, isn't it?
Or maybe trillion-dollar question now.
Maybe. Look, while GCP's growth is really substantial, the sheer scale of the search business is just massive.
Right.
It would take considerable time and continued massive growth from GCP to fully offset a significant decline in search if one were to happen. It's probably more accurate to see GCP as a powerful number 2 engine.
A secondary growth driver.
Yeah.
And crucial diversification.
Exactly. Diversification is key here.
What are the main risks for GCP then, moving forward?
Oh, the competitive pressure isn't going away. It's intense.
AWS, Azure.
Right. And maintaining that growth requires huge, continuous capital investment.
Yeah.
Big spending on data centers and infrastructure.
Which hits profitability.
There's constant pressure on profitability and margins. Plus, increasing regulatory scrutiny, especially around AI investments, the DOJ is watching that, and just the inherent execution risk of navigating complex enterprise sales. It's tough.
Okay. Let's transition again, maybe to another household name, YouTube. It often feels like YouTube just keeps chugging along, but what are the key trends there?
YouTube continues to be a really robust performer for Alphabet. Very consistent growth in both ads and subscriptions.
Ad revenue in Q1 2025 was $8.9 billion. healthy increase from last year.
A healthy increase, yes, though I think you noted it slightly missed some analyst expectations.
Yeah, just slightly, but still growing well.
Exactly. The overall trajectory is still positive. And that ad growth is being fueled by strong user engagement, right? People are watching.
Yeah, definitely. And the popularity of shorts, their short-form video.
Shorts are huge. And also a notable rise in viewership on connected TVs. People watching YouTube on their big screens.
Like regular TV.
Kind of replacing it in some ways. They're also rolling out new ad tools for shorts and experimenting with AI overviews in YouTube search too.
And the subscription side, those numbers seem pretty impressive.
Very impressive. Alphabet now has over 270 million paid subscriptions total. That includes YouTube Premium, YouTube Music, Google One Storage.
Mostly YouTube and Google One, right?
Mostly, yeah. And specifically for YouTube Premium and Music, they've passed 100 million subscribers.
Wow, 100 million paying users.
And that number doubled in about 2.5 years. So really strong adoption of the paid offerings.
That recurring revenue must be valuable.
Hugely valuable. It provides a great layer of financial stability alongside the ad business. And YouTube Music is also steadily carving out its share in the very competitive music streaming market.
So having both ads and subscriptions, that dual monetization is a big strength. Gives them resilience.
Precisely. It's a balancing act, right? Between the free ad-supported side that brings in the massive audience and ad inventory.
And the premium ad-free experience that people are clearly willing to pay for.
Exactly. And don't forget YouTube's huge content library and their relationships with creators, major strategic advantages.
But they're not immune to competition, surely. TikTok is still a beast in short-form video.
Oh, the competition is fierce. Absolutely. TikTok is dominant there. And you've got all the other streaming services vying for attention.
Plus the usual challenges. Content moderation.
Always a challenge.
Yep.
Content moderation, potential ups and downs in the ad market, platform competition, regulatory scrutiny, making sure advertisers feel their brands are safe. It's ongoing.
Okay, now let's delve into the more experimental side of Alphabet, the other bets segment. High risk, potentially high reward.
Exactly. And the Q1 2025 numbers reflect that. A slight dip in revenue, and the operating loss widened to over $1.2 billion.
Over $1 billion loss in one quarter.
Yeah. It really underscores the long-term, very investment-heavy nature of these ventures.
Let's focus on a couple of the big ones. Waymo, first, the self-driving car tech. Feels like we've been hearing about this forever. Are they actually making real progress?
Yes, definitely tangible progress. Waymo hit a significant milestone, 250,000 paid robo-taxi rides per week.
Per week. That's a lot.
It's a substantial increase from the year before. They're operating in several cities now, Phoenix, San Francisco, LA, Austin, and planning more expansion.
And the tech itself.
They're using their 6th-generation Waymo driver now. It has expanded capabilities, including driving on freeways.
That's a big step.
Huge. They also consistently highlight their safety record, claiming it outperforms human drivers. And they've got key partnerships, Uber, Hyundai, Zeekr.
So right now the money comes from robo-taxi rides.
Mm-hmm.
What's the long-term play for Waymo? How does it become a huge business?
Well, the immediate focus is scaling that robo-taxi service. More cities, more rides. But Alphabet leadership has also floated the idea, down the line, of potentially selling their self-driving tech for use in personally owned cars.
Licensing it out, maybe?
Or maybe even selling Waymo-powered cars. That would be a massive market, obviously, but a totally different business model much further out.
And the competition.
Yeah.
Who are they up against?
Tesla, with its autopilot and full self-driving efforts, is a major one. And GM's Cruise, although they've had some setbacks, they're still a significant player in robo-taxis.
Okay, what about Verily? The healthcare and life sciences arm within other bets? What's their focus now?
Verily is going through a bit of a strategic shift. They're increasingly focusing on being an AI-driven technology platform provider for the healthcare industry.
So less about making their own health gadgets, more about providing tools for others.
Exactly. Instead of developing a wide range of their own products, they're offering tools and infrastructure for data analysis, AI model development, building applications that other healthcare organizations, researchers, pharma companies can use.
Interesting pivot. Providing the picks and shovels for AI in healthcare, maybe?
That's a good analogy. Key offerings include things like Workbench for research data, Lightpath for chronic care management, Viewpoint for clinical research, Sightline for public health. They also recently separated their core infrastructure from Google for more autonomy.
And this refocus on being an AI platform came after some restructuring.
Yes, there was some internal restructuring. It seems the focus now is really on leveraging Alphabet's AI strengths to enable others in the complex healthcare space.
So overall, what's the big picture potential for these other bets, and what are the main risks for Alphabet?
The long-term potential could be huge, right? If Waymo cracks autonomous transport or Verily helps transform healthcare with AI, these are massive industries.
Game changers.
Potentially. But the risks are equally substantial. They burn through a lot of capital with no guarantee of profit.
A $1.2 billion loss.
Exactly. Market adoption can be really slow for truly disruptive tech. Execution is incredibly hard. And there's always the risk that some of these bets just won't pay off, leading to significant financial losses.
Okay. We've talked a lot about AI hitting search, but Alphabet's overall AI strategy is much broader, isn't it? It's not just search.
Oh, absolutely. It permeates everything. Alphabet talks about a full-stack approach to AI, and the Gemini family of models is central to that.
Gemini 2.5 Pro being the latest big one.
Right. Their most advanced model, impressive reasoning, multimodality, meaning it can handle text, images, audio.
Video too.
Yeah, various data types, and a really large context window, which lets it tackle much more complex tasks.
And they're using it internally too, right? For coding.
Significantly. An interesting stat. Over 30% of Google's own code is now generated with help from AI tools. That's a big productivity boost internally.
So how are they actually making money from this AI capability outside of search?
It's basically a two-pronged approach. First, enhance existing products.
Like we discussed with search.
Right. And in Google Cloud, offering Vertex AI for building models, AI-boosted BigQuery, security AI workbench, plus direct API access to models like Gemini 2.5 Pro with clear pricing.
And workspace. Gmail, Docs.
Exactly. Integrating AI into those tools, summarizing emails, drafting documents, analyzing spreadsheets, improving meetings, that's likely monetized through premium subscription tiers, saving users time, boosting productivity.
Okay, so enhancing existing stuff is prong one. What's prong two?
Creating entirely new revenue streams directly from AI. This is really crucial for showing the additive value of all this AI investment.
What might that look like?
Well, Gemini's advanced capabilities generating interactive simulations, building web apps, they hint at potential for totally new AI-powered tools and services down the road.
Like?
Maybe industry-specific AI solutions, more sophisticated developer tools, advanced content creation platforms, even personalized learning applications, things built on Gemini.
But developing and monetizing AI at this scale, it must have its own major challenges. What are the big hurdles?
Oh, definitely. The cost. First off, the financial investment is huge. R&D, but also just building the massive computing infrastructure needed.
The chips, the data centers.
Exactly. And the talent war is fierce. Attracting and keeping top AI researchers and engineers is incredibly competitive and expensive.
Ethical considerations, too.
Huge. Ethical and societal risks bias in models. Potential for misuse. Ensuring there's an ethical backbone, as DeepMind puts it. That's critical.
And just figuring out how to make money from it.
That too. The monetization challenge. Finding the right balance between free and paid features, avoiding margin compression if AI makes existing things cheaper to do. It's complex. And the regulatory landscape for AI is still taking shape globally, adding uncertainty.
It sounds like Alphabet is juggling risks across, well, pretty much all its different parts. Can we maybe break down the key risks by segment? Get a structured overview?
Yeah, that's a good idea. Let's try it. So for the core search and advertising business.
Antitrust has to be number one.
Definitely. Antitrust on regulatory pressures, those DOJ cases, the scrutiny on default agreements, that's huge. Then there's the risk of AI disruption itself. New AI search tools, competition from Apple, Bing.
And the ad market being sensitive to the economy.
Right, economic sensitivity. Okay, then Google Cloud Platform, GCP.
Competition.
Intense competition, AWS, Azure, Microsoft's bundling, profitability and margin pressure due to those high capital expenditures, execution risk in the enterprise market, and again, regulatory scrutiny, especially on AI investments. Content moderation and brand safety that's perpetual. Competition from TikTok, other streaming services, regulatory concerns around privacy, child safety, and fluctuations in the overall ad market.
Other bets.
The big ones there are the sustained operating losses, the sheer uncertainty of market adoption and commercialization for things like Waymo, the long development cycles, and the capital intensity. Just burning cash.
And then overarching risks for AI itself.
Yeah, across the board. Ethical and societal risks we mentioned, misuse, bias, just the incredibly fast pace of innovation and competition, monetization uncertainty, the talent war, and regulatory uncertainty, specifically around AI development and deployment.
And finally, risks for Alphabet as a whole.
The global regulatory environment beyond just the U.S. macroeconomic headwinds affecting everything, the pace of tech disruption, even beyond AI, key person risk, and of course, ongoing data privacy and security concerns.
Wow, that's a lot of risk factors.
Yeah.
The regulatory challenges alone seem like a significant potential drag.
They really are. The number and complexity are substantial.
Okay, let's shift gears slightly. Put on an investor hat. What does Alphabet's stock valuation and financial health look like right now?
Well, as of early May 2025, the key valuation metrics, like the price to earnings or PE ratios, were actually trading a bit below their historical averages.
Lower than usual.
Yeah, and also lower compared to some big peers like Meta and Amazon at that time. This could suggest the market is pricing in some of those risks we just discussed.
Makes sense. But financially, they're still incredibly strong, right?
Oh, absolutely. Rock solid financial position, massive cash reserves, very healthy balance sheet.
And they're returning cash to shareholders now, too.
Yes. They recently authorized a significant new share repurchase program, buying back their own stock. And, importantly, they initiated their first ever quarterly cash dividend, a signal of maturity and confidence, perhaps.
What's the general feeling among Wall Street analysts covering Alphabet?
Overall, sentiment is generally positive. The consensus rating was strong buy with a positive average price target.
So, mostly bullish?
Mostly. But there are some more cautious voices out there, analysts highlighting concerns about rising competition, the evolving search dynamics we talked about.
And there's that idea of valuing the parts separately. Some of the parts.
Some argue that if you valued search, cloud, YouTube, Waymo, etc. individually, the total might be higher than the current stock price, suggesting the market might be undervaluing certain segments, maybe cloud or Waymo. It's a qualitative argument mostly, but interesting.
So let's try to bring all this together. What's the concluding analysis, the overall investment outlook for Alphabet? I mean, is it a compelling long-term investment despite all these uncertainties, especially around search?
It's definitely a nuanced situation, isn't it? There's no simple yes or no.
Doesn't seem like it.
Alphabet has immense strengths. The financial foundation is incredible, dominant positions in huge markets, impressive growth in cloud, and, as we noted, a valuation that looks, well, reasonable compared to its history.
But the risks?
But the risks are very real. The potential long-term AI impact on search monetization is the big one. Intense competition across the board. And that persistent, complex regulatory pressure.
So the core question for investors is,
can Alphabet's diversification, GCP growth, YouTube strength, maybe other bets eventually, and their clear AI advancements effectively counterbalance any potential headwinds in that core search ad revenue?
And your take? Cautiously optimistic.
I think that's fair. Cautiously optimistic. The search business still has a massive moat, but the threats, especially to those default agreements, are real. The future likely hinges on successfully transitioning, maybe from just monetizing access to information towards monetizing the synthesis of information and AI-driven actions.
A fundamental shift.
Potentially. And the growth in cloud and YouTube provides crucial diversification and resilience while that happens.
So for listeners tracking Alphabet, what are the key things they should keep an eye on moving forward? What are the indicators?
Okay, key things to monitor. GCP's growth rate, is it sustaining? The actual impact of AI on search metrics, clicks, ad pricing, engagement, YouTube's subscription growth and ad revenue trends, any tangible progress in monetizing AI beyond search new products, GCP AI services uptake.
Regulatory developments, obviously.
Absolutely. All regulatory developments and case outcomes. Progress or lack thereof in commercializing other bets like Waymo and Verily, and how Alphabet continues to allocate capital dividends, buybacks.
So it requires a long-term view.
Definitely approach it with a long-term perspective. Recognize these bets, these transitions take time to mature, and continuous monitoring is essential because the landscape is just evolving so fast.
So while that precarious situation label has some truth to it.
It does. But Alphabet's underlying strength, its financial muscle, its talent pool, they suggest a significant potential to navigate these challenges and create long-term value. It's not a company to count out.
Right. So the key takeaway really is that Alphabet is at this truly fascinating inflection point, navigating this huge AI revolution while leveraging this incredibly diverse and powerful portfolio of businesses.
Exactly. We've seen the evolution of search, the rise of cloud, the resilience of YouTube, the sort of long shot potential of other bets, and just how AI is becoming critical across the entire company.
It's a company undergoing a profound transformation, facing, both massive challenges and huge opportunities in this rapidly changing tech world.
Couldn't have said it better.
And that brings us to our final thought for you, the listener, to consider. Given all these immense changes underway, the speed of AI, the looming regulatory decisions, the shifts in how we all use technology, what single factor do you think will most significantly shape Alphabet's future? Is it a tech breakthrough, a court ruling, a shift in user behavior, something else entirely?
Yeah, that's a great question to ponder.
Something to think about as you keep observing this dynamic world of tech. Thanks for taking this deep dive with us today.